Anyway, I will give you more complicated example now. Okay, right now I give you the second example. Assuming, let me see. Same thing, your company borrow $100,000 cash. Same thing. Okay. Right now the thing more complicated because the market rate is 12%. 12%. Okay. It's not 10%, 10%. Right now the market rate. That means if anybody deposits the same amount to the bank, they will receive 12%. It's kind of high, but assuming that is true. However, your company does not pay 12%. Your company only pay 8%. Think about this. Okay? Your company only paid 8%. So, in order to have this money borrowed become true, you can think about that. No anyone will loan the money to a company and your company only pay 8%, right? So the only thing can make this borrowing become true is your company borrow 100,000 but only receive less amount. Got it? However, the interest still based on 100,000 to calculate. And by the end of the years, on the maturity day, your company do pay 100,000 back. So let me say it again. Okay. So this example changed the scenario. Don't ask me why. Just make up this story. Of course, in real life, if you want to make the life easier, your company just match the market rate. So if the market rate is 12%, your company just say, okay, pay 12%. So if you borrow 100,000, you will receive 100,000 cash, and then you just base on 100,000 and 12% to calculate the interest, and the life is easier. But for I would say for the academic education purposes, the professor always make out a very funny and strange story and ask students to figure out for no reason, okay? So right now, we just say the market rate is really 12%, but company just want to pay 8%. So only way to make the whole thing happen is your company can only receive the money less than 100,000, but based on 100,000 to calculate 8% interest, and by the end of the maturity, your company really pay back 100,000. And only based on this scenario, you can attract people come in and say, okay, even though you only calculate 8%, but I don't give you 100,000. That is called discount. You will hear about this terminology on the financial market all the time. Okay, when your company issue bond, note payable, and only receive the true money less than the face amount. The face amount is 100,000. I borrow 100,000 from you. That's face amount. But your company only received the amount less than that. The difference is called discount. All right. So I want to pause for a while. I hope everybody understand what's the scenario right now. Then I will continue for the accounting.
So that's they call discount rate?
Right. It's not, we don't use rate. Be careful, okay? I'm only talking about right now is what's discount mean. Your company receive the money less than the face amount. Because when we say discount rate, it totally change. Discount rate totally mean something else. So I don't want to confuse.
Is that the equivalent to the bank get more interest?
No, still the same. If you calculate everything, the bank or the lender still receive 12%. When you say more, yes, more than 8%. Because on the face, your company say, I borrow 100,000, I only pay 8%. Yeah, you only pay 8%, that's true, but you did not receive 100,000, right? So if you calculate everything, then it's equivalent like you receive 100,000 and you pay 12%.
So it will be the same, or we will have some charges?
No, it's when you convert everything will be exactly the same. So I would say in reality, just don't get trouble. You just pay 12%. You receive 100,000, make life easier. But I would say, for the academic reason, professor always make out a very funny, strange story, and have students figure out what happened. So to answer your questions, in here, the company on the face say I want to borrow 100,000, but I only give 8%, but market rate is 12%. And only thing to make this thing happen is your company receive the less amount. You pay 8% is okay, but you receive less amount than 100,000. Then if you convert everything back, it's exactly equivalent like your company receive 100,000, but your company pay 12%.
You mentioned this as an academic example. In real life, do they
Also happen.
this?
Also happen.
Okay.
Also
So
happen.
you can negotiate with them to get this.
Yes, because we never know what is the true market rate. Right? We never know what is the true market rate. This is after negotiation. Your company only pay 8%, but the lender say, no, I ask 10%. If you finally you reach the agreement, you pay 8%, but the lender asks for 10%, of course the result is you receive less amount. But you still based on 8%. It's okay, we're based on 8%, no problem. But I request 10%. So if your company insists, you say, okay, our board of meeting only approve 8%. Then on the market, your board of meeting cannot decide the market, right? So you need to rely on the other party. The other party's lender say, okay, I insist 10%, otherwise no deal. No deal is no deal. And finally you say, okay, my company pay 8%, but I receive less than 100,000, but I still pay 8%.
So the 8% interest rate will charge on the 100,000 or the?
No, on your, yes, on the 100,000, that's correct. It's based on your 100,000. So,
But we receive less than 100,000.
of course. So
But
that's for discount. So I want to hope for a while, everybody we have to understand the whole scenario, otherwise we cannot discuss. The reason why you receive less amount, but you based on 100,000 to calculate, because you pay 8%. And 8% is not the market rate. Market rate should be 12%. Understand? So you would like to, you are willing to receive, say, whatever the less amount, but you still based on the 100,000. 100,000, 8%. Of course, nobody happy, right? However, the lender is happy because lender give you less than 100,000. And on the last day, your company paid back 100,000.
So that means your liability is still 100.
Yes. 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 That's true.
So the not payable account, you should put the 100.
No, we all discussed that.
Not
No,
okay.
that make the whole thing different from the first scenario.
So the meaning is instead of you receive $100,000, you receive like
Something else.
$90,000.
We'll
Yeah,
see.
less than that.
We'll see. We'll see it very quick. I just hope everybody will understand what's the scenario, and also when we go step by step, I want everybody you can answer it. Just don't write it down the number. I hope you don't write down the number at all. Okay.
So is that
If you
similar
just leave
to
there,
buying the point using paying some fee to buy down the point?
something like that.
Something like that.
Something like that.
Well, it's not present value, future value.
We'll talk about that issue also. Yes.
So is this like a zero coupon? By
Yes,
mature?
could be like that. Yeah, could be like that. Same company. But you know, at this moment, I want you to forget any other issue, because those zero coupon, buy down, those issues are the more advanced from here. So don't get it complicated right now. Just follow us step by step, and not even write down any number right now. If you write it down any number, I know at that moment you are not thinking. I hope we go step by step, you think it, because number is in your book. Number is not important at all. Okay, so you can go back to check the number, but at this moment I hope everybody can go step by step and you can answer. Okay?